What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. And if you guys enjoy watching these videos, especially on Fundrise Friday, make sure you give a like so that we can have more people look at this portfolio and make some decisions if Fundrise is for them or not. So let's look at Fundrise right now. So I'm at $11,707. It's been up $2.17 since my last login. And let's see what we got. A new acquisition. So the property offers both stable income and long-term growth potential thanks to the PepsiCo credit lease. So dividend growth investor, our battle still resumes with Coke versus Pepsi, by the way, as well as a growing demand for distribution centers near major population centers. So they acquired a new Class A distribution center with an in-place lease to Pepsi in Capitol Heights, Maryland, for roughly $7.8 million. The property is located less than 30 minutes from downtown Washington, D.C., directly inside the Capitol Beltway. So, first of all, let's just look at this. Okay, why they invested. Okay, first of all, Pepsi is a phenomenal company. The price per share is phenomenal. They own a lot of things. So the Fortune 500 credit tenant, Pepsi's exceptional A credit combined with the 9 years remaining on lease makes this investment attractive from a risk-adjusted return standpoint. Property is located less than 30 minutes from downtown DC and adjacent to Capitol Beltway, which acts as a conduit for the entire metro area. From the site, delivery vehicles can reach most of the region within an hour's drive. That's it's like a base, okay? I really like this. So, this is very strong, okay? So this is part of the equity, okay? The balanced E-rate. So let's just look at the balanced E-rate real quick. Okay, so let's just look at this real quick. So the risk-adjusted return, their projected return is 6.4 to 11.1%. That's not bad. It's part of equity. This is not too bad. So they gave us an update on that. And let's look at my portfolio. So here's the balanced E-rate real quick. I have 0.4% of my portfolio. The estimated value of shares is $42.02. The position total is $42.02. So I have 4 shares. The current net asset value per share is $10. So they haven't paid any dividends. So I can't tell you if the dividends and appreciation are looking pretty good, because it looks like this is kind of brand new. So this is like their first active project. So this is kind of exciting. So this is about the balanced E-rate. We believe that the near intermediate term market for investment in select commercial real estate loans, commercial real estate property, real estate equity investments, commercial real estate debt, securities, and other real estate related assets is compelling from a risk return perspective. So, okay. So this looks, this is nice. So the one thing I'm looking at this, okay, I'm going to jump to what happened with rich uncles. A lot of you guys are asking me a lot of questions. I'm going to tell you there are 2 scenarios so far that I'm looking at and what I plan on doing potentially if I get any return on rich uncles or they completely abolish the BRICS rate, which could happen. And I'll show you a article on that too, which is kind of like, whoa, but this is why you're diversified. So far, Fundrise is very strong, so I like what I see. All right, so this is what they said about the BRICS rate, okay? Beyond the decline in property values, BRICS rate has a $5 million loan utilized to acquire our real estate and finance company operations, which is due and payable this October. We are active in dialogue with the lender and have asked them to consider an extension of due date to allow the rate sufficient time to produce cash needed for repayment. However, we do not believe an extension is likely without at least some form of partial loan repayment. Without an extension, we anticipate the rate's auditor will be issuing a going concern opinion for the rate when we file our 2019 annual report in the weeks ahead. Our ability to repay the loan could enable the rate to participate in any future property value recovery. So given the materially reduced rent collections at this time, the rate is unable to make any dividend distributions and has limited cash available to maintain the rate's operations. So barring an infusion of cash and repayment of the near-term maturity, which would eliminate the monthly interest payments, we anticipate the Brix rate having only 8 to 9 months before his fourth. Read that again. We anticipate the Brix rate having only 8 to 9 months before it'll be forced to cease operations. Our external advisor has agreed to waive $300,000 in fees that we owed, as well as waiving any current compensation. This helps tremendously. With the looming loan maturity and current cash constraints, the rate only has a couple of options at its disposal. Given its particular corporate structure, the Brix rate is not eligible for any payback protection program, commonly referred to as PPP, or other small business administration loan products that you may have read about in the news. So the first option would be for the Brix rate to reopen its primary offering and receive fresh capital. This new cash infusion would be used to service debt obligations and would not likely be available for redemptions. If we were able to raise a sufficient amount of new capital, then we could fully substantially repay the loan. Positive benefit of this approach that it gives the rate, assuming enough money is raised, many years to achieve full price recovery. However, given the new 32 cents net asset value per share, the option is highly dilutive to existing investors who did not wish to purchase more shares, as new investors, new investors could purchase new shares at the distressed pricing. So I'll read option 2, but I'll tell you my honest thoughts. I know I did do also a comment on this. So the second option involves an approval of an orderly liquidation plan whereby the rate seeks to sell all assets over the next 12 to 24 months. If we can identify a buyer willing to purchase one of our assets for more than our recently appraised values, then the rate would be able to capture some price recovery while also solving for the loan repayment. Primary benefit of this approach is that it eliminates dilution and ensures that any price recovery only benefits existing investors. The downside of an orderly liquidation is that there can be certainty that a sufficient price recovery can be obtained within allotted maximum allowable time in 24 months. While making no guarantees, we believe that a successful resolution to our 24-hour fitness property and a partial recovery of the stadium view could possibly result in some price recovery over the next 24 months, potentially multiples more than the current net asset per share. So what I've kind of understood is that this rate could be cut and maybe we can get our money, some money back. But if it does happen, I may consider just throwing it all in Fundrise, or throwing half in my dividend portfolio and then half in Fundrise. So it's, the crazy thing is the guy that like pretty much runs the Brix rate, Bill Brahms, used to work for Realty Income. So, I mean, the guy is very sharp and he's very innovative. It's just something that really really was shocking that happened. I mean, how rare is something like this to happen? So basically with this, okay, the difference between this rate and Fundrise is huge. I mean, this is kind of a small thing. Now, I did lose some money with this, but I'm going for option 1, okay? It's very dilutive to existing investors who do not wish to purchase more shares, as new investors could acquire shares at distressed pricing. We do that, okay? I mean, who wouldn't throw money in at 32 cents a share? I mean, you throw in like, you know, $200, $300, it's like, yeah. But the problem is I mean, this rate was hit so hard, and I mean, Fundrise is more stable. I mean, Fundrise took a hit. I'm not too worried about Fundrise taking a hit. If they do, you know, so be it. But, you know, Rich Uncles is not as powerful as Fundrise. So there is a risk with investing. So I will also jump to another article about Rich Uncles and what's going on. I think this is really interesting, and why I think, and I'll go into why I think Fundrise is a little bit more powerful. And I'm going to just jump to the article that this one guy said. So basically, I'm going to go down here, okay? As a result, the Bricks rate is now receiving almost no rents from tenants and is facing debt maturities later this year that is almost certainly won't have any cash and may not have that asset value to refinance, as it could struggle enough asset value in a sale to cover its obligations. As of March 31st, it had under $500,000 in cash, which, according to Brahms, would cover its operations for 8 to 9 months. The company has been giving some breathing room by the lender of the 24-hour fitness property in the form of temporary mortgage relief through September, which does also have a $5 million loan due in October. As a result, management expects this company's independent auditor to issue a growing concern opinion. It anticipates the company can't survive without going through a reorganization of its assets. If this were to happen, shareholders would likely be entirely wiped out and realize what now has just been a paper loss. And since this is a non-traded rate, the company has no ability to redeem shares. And there's not really anything investors in the rate can do but suck up the losses and hope for the best. So Fundrise, let me just jump to Fundrise. These guys are extremely powerful compared to Rich Uncles. And, you know, it's always good to be diversified, because look at this portfolio, okay? Let's just look at these projects that are going on. Still successful, okay? I have all these E funds and these rates, and you know, all these are power. I mean, these are well managed. So that's the thing I really like about Fundrise, you know, with the income rate, year-to-date returns, this and that. But, you know, some of these are just ramping up. So stabilizing, ramping up, ramping up, ramping up. So this is the exciting thing. Okay, these are operating. And then all these bad boys are getting ready to roll. So let me know what you think of this video, and let me know what you think I should do with my Rich Uncles if I get an opportunity to at least try to save some stuff. I think I'm going to throw, if option 2 happens like I just read, if not, go back to watching that segment. But things start to change. I'm hoping option 1 happens, because I would really like to, you know, buy low and somebody's going to try to capitalize on that has a lot of money. So I would not be surprised if somebody just went in and just threw in money for all those shares because they're so low, and the return could be like phenomenal. But Fundrise is very stable, and it's just very, very stable, and you know it's solid. I think it's solid, and this is its first test through a recession. I mean, these things are ramping up, and a lot of places have paid back their debt, which is good. And I just really like what I see. So, being diversified is fun. It's something that I'm glad I did, because what happens if I threw all my eggs in rich uncles and shit hits a fan? Or, I have money in Fundrise, I have money in M1 Finance, and maybe rich uncles will come back. I mean, that's, call me maybe, that's what I kind of think. I think they're in complete damage control, and it's looking like a dumpster fire. I'd put money in it. I would definitely put money in it, 32 cents a share. But I might just, if I get, X amount of dollars, I might just throw it in Fundrise and have them do the work for me. So that's the exciting thing. So about Fundrise, it's just growing. It's just, I don't know. Am I allowed to name a portfolio? Maybe I should name it something Star Wars related. But let me know what you think of this video. Let me know what you think of the rich uncle situation, and it's really interesting. It is really interesting. So thank you for watching this video, and you guys be safe this weekend. Let's cross our fingers that the worst is over with the bug, and that we can be happy, let sports go on, let the economy start rolling. So thank you again. Have a great weekend. This is Fundrise Friday. If you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. And make sure you give that like on here so that more investors can see this, and if they consider investing in Fundrise, and that they are aware of rich uncles and what the diversification and importance of diversifying your portfolio. So thanks again, and have a good one.